Hello everyone. Today we will start learning vocabulary related to the field of accounting and apply it in the reading about assets. 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 Everything a company owns, including cash, accounts receivable, money a company is going to receive, property and goods. Liabilities. 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 Everything that a company owes to others, like loans and mortgages. Balance sheet. Balance sheet. Balance sheet. A document that records a company's assets and liabilities at a certain moment in time. The balance sheet is based on the accounting equation. Assets equals liabilities plus owner's equity. Balance sheet. Balance sheet. Balance sheet. A document that records debit. 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 An accounting entry that increases assets or expenses and decreases liabilities or equity in a company's financial records. Debit. Credit. 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 An accounting entry that increases liabilities or equity and decreases assets or expenses, recorded on the right side of a ledger. Double entry. Double entry. Double entry. An accounting system in which each transaction is recorded as both a credit and a debit, an asset and a liability. Gross. 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 The total amount before any deductions, such as taxes, expenses, or allowances. Gross. Net. Net. The remaining amount after deductions such as expenses, taxes, or allowances have been subtracted from the total. Net. Net. Revenue. 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 The total income generated from sales of goods or services before deducting any expenses. Revenue. Capital. 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 The financial resources or assets invested by owners to start and operate a business. Capital. Capital. Cash flow. Cash flow. Cash flow. The movement of cash into and out of a business, representing its liquidity and financial health. Cash flow. Accounts payable. Accounts payable. Accounts payable. The amounts a company owes to suppliers or creditors for goods and services received but not yet paid. Accounts receivable. Accounts receivable. Accounts receivable. The money owed to a company by customers for goods or services provided on credit. Accounts receivable. Overhead. 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 The indirect costs of running a business, such as rent, utilities, and administrative expenses, that are not directly tied to production.
Accounting period, accounting period, accounting period. A specific time frame during which financial transactions are recorded and reported.
Financial statements. Financial statements. Financial statements. Reports that summarize a company's financial performance and position, including the balance sheet, income statement, and cash flow statement. Share. Share. Share a unit of ownership in a company, giving the holder a claim on part of its assets and earnings. Shareholder. 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 An individual or entity that owns shares of a company and has rights to dividends and voting in corporate decisions. Owner's equity. Owner's equity. Owner's equity. The residual interest in the assets of a business after deducting liabilities, representing the owner's investment and retained earnings. Auditor. 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 A professional who examines and verifies a company's financial records to ensure accuracy and compliance with regulations. Bookkeeper. 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 A person responsible for recording financial transactions, maintaining ledgers, and preparing basic financial reports. Chartered accountant. Chartered accountant. Chartered accountant. A qualified accounting professional with certification from a recognized accounting body, specializing in financial management, auditing, and taxation. Creative accounting. Creative accounting. Creative accounting. The use of accounting techniques to present financial statements in a misleading but legal manner, often to enhance a company's financial position. Current assets. Current assets. Current assets are short-term resources that a company expects to convert into cash, sell, or use up within 1 year, including cash, accounts receivable, inventory, and other liquid assets. Fixed assets. Fixed assets. Fixed assets are long-term tangible resources that a company uses in its operations to generate revenue, such as buildings, machinery, equipment, and land, which are not intended for resale. Intangible assets. Intangible assets. Intangible assets are non-physical resources that provide long-term value to a company, such as patents, trademarks, copyrights, goodwill, and brand recognition. Current liabilities. Current liabilities. Current liabilities are a company's short-term financial obligations that are due within 1 year, including accounts payable, short-term loans, and accrued expenses. Long-term liabilities. Long-term liabilities. Long-term liabilities are financial obligations that a company is required to settle over a period longer than 1 year, including bonds payable, long-term loans, and lease obligations. Cost of goods sold. Cost of goods sold. Cost of goods sold (COGS) refers to the direct costs incurred in producing or purchasing the goods a company sells, including expenses for materials, labor, and manufacturing overhead. Withdrawals. Withdrawals. Withdrawals refer to the act of taking out money or assets from a business by the owner for personal use, reducing the owner's equity in the company.